I'm looking at the markets today. Crude oil is going down a little bit. It's actually in a very, very tight trading range. And same with the silver. It's going up a little bit, going down a little bit, not doing a lot. And I got a little alert this morning on one of my, from a subscriber that asked, how come spot silver went down almost 10% today, whereas the spot price of silver was going up? I know the simple dumb answer would be that Sprott fund doesn't actually trade with the price of silver, but they started to actually announce that they're going to be buying silver, and somehow investors think that Sprott's going to be buying it at a lower discounted price. I don't see how, but I think the opposite. So they think that the net asset value will be less in the fund. Now, I want to point out something. And this is pretty obvious. This is a chart of PSLV going all the way back to the beginning of the year, right? Not the beginning of 2012, but the beginning of 2011, because we're really just starting in 2012, and today's January 18th, 2012, Wednesday. Now, I did point out that Sprott's PSLV was holding up a lot better than the SLV. Then it takes a dive. Well, that was partly because the premium was up to 31%. It never had a premium that high over the net asset value. And I'm going to say something else. On Friday the 13th, I know we had this thing with the euro and, well, not the euro per se, but the devaluation of many nations' debts, especially France, from AAA to AA plus, and I forgot there was a good half a dozen nations that were downgraded, and PSLV was going down at that time, and I thought that was related. But you know what? Obviously, insiders know what's coming up. They were selling. Now, I'm just taking a guess on this, but you know, it's quite obvious to me. Okay, I see this crap right through it. I just don't have the advanced information, unfortunately. But if I do, I'm going to act upon it, and I'm going to take the fiat currency. So insiders must have been selling on Friday. It wasn't because of the euro and they were reacting different, or because the euro nations were being downgraded. Insiders were selling, and that was this dip right here. Well, SLV hardly went down at all. Now, I'm not saying SLV is a better fund, but they knew it was coming up. So Sprott is actually announced they're physically going to buy like $300-something million worth of the silver and add to the fund. So it dropped like almost 10% today. But I do want to point out about this insiders type of stuff, because Sprott was selling over here, and he was selling all along this nice high over here. And I picked up an article after the fact on September 16th that PSLV insiders and Sprott were selling off PSLV all in here. And if I would have saw that article, I would have dumped my stuff, part of it, because I saw a gain, probably half, not knowing that this was going to come up. But I'm playing right now. This is a new year, and I don't care about showing income anymore. You know, I showed income in 2011. Now I don't care about showing income. It's a new year, so I'm playing it different. And what I did this morning, I didn't buy much, but I bought some PSLV this morning when it dropped down that much. It's a guess, but you know, when it's around, I think it was like 1324 around there. When you're looking at these dips, it's 1306, 1349, 1289. That was about the lowest it was in since the beginning of the year, practically. And this is a dip here at 1338. So I could, in these highs, it looks like $14.50, $15. Well, that's not $15. I think that's the way this thing's reading. Well, it says it, $15. So it could, and this is $16 here. So it could easily spring back up. And what I'm going to do is I won't be holding that long term. I see it spring up. Goodbye. I'll take the gain. And I'm I'm saying that's what I'm doing. If you want to follow that, go ahead. I mean, I'm not telling you, but you know what? I'm doing what I'm not advising anybody to say, I'm not telling anybody what to do. But the way I see it, that's a time to buy. And my strategy is I'm going to buy on that dip and I'm going to throw it away as soon as I get a gain. It's not physical, it's electronic. It's physical, he owns someplace. So I'm going to do that. I'm going to point out something else, common sense on these metals, because I see here two extremes. You know, the people that are totally into physical silver, they're wrong, and the people that are into fiat, they're wrong too. They're both wrong. This is a chart on the oil prices, and I'm going to tell you, oil, silver, and gold are related, especially silver and gold. But when oil usually takes off like this, like we saw this, it rise, usually silver takes off too. It didn't take off as much here, but it was somewhat. It was somewhat. It didn't take off like it was taking off here, but the correlation between oil and silver, when oil is in a very hard bull run, remember this, and I'm going to point out just a few things that are common sense. When oil is in a very, very hard bull run, silver usually is, or it's going to follow, or it's going to precede that bull run. It usually has a pretty good correlation between oil and silver. But when things are kind of like settled down, the correlation stinks. It's bad. Now the correlation between oil and gold is not bad. It's not bad. Now there's something else you can read into that. This is something I think should be really paid attention to, and I know it's been harped on a lot about the silver-gold ratio. Now this was back when they had the oil spike. It was pretty flat, but still silver was going up pretty good during that time when the oil was going up. Then you had the 2008 crisis, and you see what happened to the ratio. It went ballistic the other way, where it took like over 80 ounces of silver to buy 1 ounce of gold. Quite obviously, that's when you buy if you have the cash. But you know what? You got to be doing the right stuff to have the cash. That's the whole point. So what are you buying silver with? Fiat currency. What does people hope to get when silver goes real high? Actually, fiat currency, if it buys material things. If it buys material things. Now, the one way to tell that it's going to buy more material things is the silver-gold ratio, because gold does follow material things very, very well. It's been a standard, and all the paper traders even know this too. It's not, I know sometimes the major media calls gold a risk asset, but even they're stretching it then, because most of the paper traders see it as a safe haven, as long as it's not like at an all-time high or something like that. But if they're like really, really scared of all the currencies are going down, they'll run to gold. So when you have this silver ratio taking off in a bull run, and this is a bull run going downward because the silver ratio went from 67 down to like 32 over here, you should be cautious, because there's an old principle, it seems like it's been around for many, many years. When silver gets much too ahead of gold, that's when you're going to see this hard pullback, and it's going to stay flat for a long time. That seems to be that seems to be like the silver rule. If you can actually predict something with silver, that's it. If it gets too far ahead of gold, it's going to have a hard pullback, and it's going to lay flat for a while. Now, you don't want to miss the final bubble, because I'm sure in 1979, when silver doubled and it had a little bit of a pullback, I'm sure people got out, and then it tripled, then a bunch of suckers got in, and then it nosedived after that. So I think on the final blow-off bubble, it's going to be up about 6 or 7 times inside of a year, and it's going to have to go to this 15-to-1 ratio. But it's going to drop off like crazy, because I'm going to say one thing, and I know the silver bugs don't like this. But you know what? I'm not. Well, I got a small channel, so I'm not going to say too. I don't care what I say because it's not going to affect the whole globe, you know. But quite obviously, silver doesn't have the utilitarian value of real estate. And I pointed out in one of my earlier videos just how much real estate went down, far more than the experts said. And real estate is 100 times more valuable. Housing, buildings. Name one. How many businesses do you know operate without a building? How many people you know don't live in a house or an apartment, right? It's an apartment. The apartment's owners is generating rents. Tell me how silver is going to do that. I think silver probably for medical purposes is absolutely stellar. I mean, I could say that. You know, it could probably cure every damn disease there is because any contact comes with, if you can make colloidal silver come in contact with a disease, it's destroyed. Probably expand life double for all I know. So I mean, silver has a unique property in that respect beyond anything. But in general, I mean, I could make a lot of arguments that real estate is far more valuable than silver, yet it crashed far beyond what all the experts thought. So beware, beware. When this ratio starts getting down to 20 to 1, you should be dumping it. Not all of it, but some of it. You should be dumping it, securing gains. If you can know, I have not, you know, even all the people that are super wealthy will tell you don't get the exact highs or the exact lows. If everybody's trying to get the exact high, everybody's going to be reacting at the same time, and you know it's going to happen. The market will change inside of hours. So you're not going to nail it that very quickly. And obviously, 1979, when it hit that peak, it was like a day, you know? I mean, it was a day. If you could guess a day right on the nose, perfect. But the odds are, you know, at least 99.9%, even a silver holder is going to guess that wrong. So if you're seeing a trend like where it's looking like a trend like this, it's kind of flat. Now, if the prices of silver were rising and this ratio was staying about the same, I wouldn't sell a damn thing. But if these go from the price of silver is rising a great deal, and this is going down to like 20 to 1, I personally am going to start selling off some of the physical. This ratio needs to be watched because do not think of gold as a precious metal. Think of it as the amount of stuff you could buy, and that means that the silver is actually worth a hell of a lot more. So if this value, in other words, in real value, it's not inflationary value, it's real value. So this ratio, if it drops like a stone and it's going down at 20 to 1, it may go to 10 to 1 before the final blow-off bubble. But I wouldn't want to try to guess it. If this ratio was going down to 20 to 1, I'd be dumping some of my physical portion of it for sure. Now, if it dropped close to 15 to 1, probably at least half of it's gone. Even though I think it might go to 10 to 1. These people saying 1 to 1? I got some serious doubts about that stuff. Serious doubts about that. And I wonder what their actual real game is, if they really believe it or not. I think most people who are telling you 1 to 1 ratio silver to gold are probably misleading the masses because they got to sell it to somebody when it's 10 to 1. It might go as far as 10 to 1. I think that's where it's going to go to. But I'd be very cautious about not taking gains, you know. And you got to remember, the American economy is not going to be walking, or people are not going to be walking around with physical silver in their pockets. They're going to be using fiat no matter what. And maybe it's not going to be fiat, it's going to be backed by commodities, but it's going to be paper and electronic markets. It's going to be that type of stuff. So beware. I think this ratio is something to be watched very carefully. You know, and I do want to point out, this is the actual silver prices. Now, it looks a lot different from this Sprott chart. You notice Sprott's fund was actually kind of bounced back a hell of a lot better than the silver prices did in this summer. But you know what he did? He sold off. He sold at this highs. He wasn't telling anybody anything. I just noticed an article on September 16th where people, insiders, were selling off. And you know, I'm going to be, if this thing goes up to like, you know, 40 something, $45 a share, the whole thing is gone. The whole thing is gone. I'm not afraid to take fiat money. I'm not afraid to take it because I'm going to be waiting for some kind of pullbacks. And if there's no pullbacks, I'm just going to be sitting on the cash because cash is still going to buy stuff, and you're smart to stay in a good amount of cash too. And I'm still going to be holding a physical. But one thing that's going to really drive up this spot price is going to be the war with Iran. And as I was stating before, when we had the 1979-1980 blow-off top in silver, you know what was going on then? The Iranian hostage crisis. So if there's I think when we see oil go up to like $150, $200 a barrel, that's when you're probably going to start seeing some astronomical silver prices. And I'm going to tell you something. I'm a big believer in precious metals. I'm not going to sell all of my precious metals, period. Not going to sell all of them. I'll sell most. But I have a definite mistrust of the electronic system, and I'll always hold back some. But I will take the fiat money and go ahead and use that into something that will produce more money for me. And it may not be the stocks, but I also want to point out something I am doing personally that probably no people, just about nobody in silver is doing. I'm going to be holding back on the palladium. I think the palladium long term is going to be double the price of gold. Double. And people talk about the industrial value of silver. Palladium, when we're talking new energy, alternative energy, and I know it's used mainly in cars for catalytic converters, but hybrids use 30%. Hybrid cars use 30% more palladium. They're not going to just get off of oil right away. They're going to be using these hybrid cars, which use 30% more palladium. And considering palladium is used in the automotive industry, it's about 60% of it, 55 to 60% of it is used in the automotive industry. What's going to happen to the price of palladium when millions and millions of new auto buyers in China, India, and Brazil, countries like that, are buying hybrids, which require 30% more palladium? That's going to drive the price up. It doesn't require a lot of palladium, so it's not going to affect the price of the car that much. You know, a big ticket item like that, it's going to maybe add another, I don't know, $100 to it or something, whatever. It's not going to be that much. Even palladium goes up to really high values because it just requires a little bit. So on a big ticket item like that, it's not like jewelry or something. It'll be absorbed and not noticed by the consumer as much. Now, when they go to hydrogen, palladium is irreplaceable and it's the only thing that can actually purge. And I know there could be industrial demand for that if palladium goes to $10,000 an ounce or something. But I'm assuming that I think since the rarity is more rare than platinum, in normal ratio platinum to gold is 2 to 1, I think palladium's going to be there. And if you're talking gold at $8,000 an ounce, well, I can easily see palladium well over north of $10,000 an ounce. But it might come into play a little later on. That's my guess. So that's going to be my hold on main precious metals for the long term. And I think most of the silver buyers aren't thinking of that. But that's a longer term hold. But in the short term, I did buy some more PSLV. And if this junk goes up in 3 days back to 10% higher, it's gone. I'll take the gain. And that's my guess, but I think it's an educated guess. But I think PSLV, it held up a lot better than this stuff. When it dropped down, it didn't drop down as much, and it went up around here, relative speaking, to the price of silver. And it's, you know, this recent thing, what happened is because they're buying more of the metals. So obviously insiders got out, and I'm going to watch for these signals as far as insiders getting out. and I'm going to be playing the electronic market some too. So I'll give you my take on it. I'm not listening to 90% of these clowns on YouTube because they're either one way or the other way, and I'm putting out my own thoughts on this.